What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, I've got not one, not two, but three stocks that we need to watch for next week. Now, these are all companies that are going to be reporting their earnings, so I will be covering their financials, their EPS versus revenue expectations for the second fiscal quarter or the second calendar quarter of 2020, and then we'll dive over to my TradingView platform to look at the technical patterns, look at the charts, and map out some key support and resistance levels for these companies. Now, this is going to be a relatively longer video, close to about 25 to 45 minutes long, because there's a lot for us to cover and go over, and I like to do a very thorough analysis and research on these companies. So if you guys do enjoy this video, please make sure to drop a like, and if we can get over 200 likes on this video, which I know you guys can do, I'll put out another video tomorrow essentially going over two more stocks. So today we're going to cover Amazon, Facebook, and Google, and if we can get over 200 likes on this video, I will put out another one tomorrow essentially going over AMD and PayPal that are also going to be reporting their earnings. I also did a separate analysis on Apple stock that you're more than welcome to watch. They also report their earnings next week, so it's really important for us to be familiar with their financials and what to expect on that earnings call. So that being said, let's jump into the video, and the first stock we're going to talk about today is going to be Amazon. So the first company that we're talking about right now is going to be Amazon, and they report their earnings next Thursday, July 30th. And they are one of the biggest online retailers. It goes without saying that their sales are absolutely staggering. So if you were to look at the financial summary, you can see that they sit at just over $280 billion in revenue as of 2019, and that number has been growing at an average rate of over 27%, which is very impressive provided the size of the company. So their gross profit margins also are at over 26% while averaging around 24.32%. When we talk about profitability, the company remains profitable with a net income of over $11 billion in 2019, a $10 billion net income in 2018, and just over $2 billion in 2016 and 2017. The net income margin is at just under 3%, which is decent provided that the company is in the retail space, and the margins are really thin in that space and are expected to be low. But their biggest profit driver remains the Amazon Web Services, AWS, which we will talk about later in the video and how that relates to their second quarter earnings. So looking at their EPS and their revenue guidance and estimates going back as far as 4 quarters, you'll notice how the company has been struggling to cope up with EPS estimates, but has consistently beaten their revenue expectations. Now for the second quarter 2020, their EPS is expected to be somewhere between $1.70 and $3.50 per share, while their revenue expectations are close to about $80 billion. Now, I also want to address that Amazon's Q2 guidance that they provided on their last earnings call, they essentially said that their revenue they foresee somewhere between $75 and $81 billion, and that will be a growth of somewhere between 18 and 28% compared to the second quarter of 2019. But Jeff Bezos also said during the call that the company will be spending close to about $4 billion on COVID-19 related expenses to make sure that he keeps everyone, including the employees, the customers, and his colleagues as safe as possible. They will be spending money on PPE, healthcare, and cleaning services for their warehouse and their office, which is why they expect their operating income or their either loss to be close to between negative 1.5 billion and positive 1.5 billion, with a spend of close to $4 billion on the expenses related to the global pandemic. Looking at their balance sheet, the company has strong financials with cash sitting at just under $50 billion with long-term debt at just around $23.43 billion. The company has solid cash to debt ratio of over 2, meaning for every $1 in long-term debt that the company has, it has over $2 in cash to cover for it. Amazon's total assets also exceed its total liabilities at 1.42, which is always a good sign, and their free cash flows to debt ratio is also over 1. That means if they wanted to, they can essentially pay off their entire long-term debt in just under 1 year, which is always a great sign for investors. Amazon continues to rank number 1 in the American Customer Satisfaction Index and has been on the top 10 list for the last 11 years. And it's no surprise because they have the culture at Amazon to always put the customer first. And Jeff Bezos has repeatedly said that he is going to do everything in order to make sure that he's providing the best user experience and that they're always striving for customer satisfaction. So now quickly going over their first quarter 2020 results, you guys can see that the operating cash flow actually increased 16% to $39.7 billion for the 12-month trailing period, compared with the $34.4 billion same time last year in the first quarter of 2019. The free cash flows, like I mentioned, are at $24.3 billion for a trailing 12-month period, and the net sales increased 26% to $75.5 billion, which is what they did in the first quarter of 2020. Their net income, however, did drop to $2.5 billion in the first quarter of 2020, or a $5.01 in diluted EPS, compared with the net income of $3.6 billion in the first quarter of 2019. So this right here is going to be their consolidated statement of operations, and you can see how their net product sales and net service sales are both up from same time last year. And they have a very similar business model compared to Apple, and I also did a separate analysis on them that you're more than welcome to watch. But their revenue can be broken down into two categories: the product revenue and services revenue. The product being the actual retailer, Amazon as we know of it, and the services are going to be the Amazon Web Services, which is essentially the profit driver or the net income driver for the company because of the high margins that Amazon has for AWS. So you can see that both of them are up from the first quarter of 2019. Product sales totaling around $41.8 billion, with their service sales are over $33.6 billion, and their operating income was at $3.989 billion in the first quarter of 2020, compared to the $4.4 billion in the first quarter of 2019. Now, as we went over in the business highlights, their net income did drop to $2.5 billion compared to the $3.5 billion in 2019's first quarter, and primarily due to the increase in cost of sales. So if you look at the operating expenses and more specifically the cost of sales, that has seen an increase of over $11 billion, going from $33.9 billion to over $44 billion in the first quarter of 2020. Also looking at their marketing expense, so you can see how Amazon spent close to about $1.2 billion on just marketing expenses, and how that number jumped from $3.6 billion to over $4.8 billion in just the same time last year. So this right here is going to be the segment breakdown for Amazon's revenue for the first quarter in 2020, 3 months ending March 31st, and comparing that to the first quarter of 2019. And you can see how North America continues to stay their primary market, and majority of their revenue coming in from countries like the US and Canada, which are going to be the big markets for Amazon, with their net sales exceeding over $46 billion, while international sales trailing at just under $20 billion. Now, another thing I want to mention is going to be the AWS, the Amazon Web Services, and how the net sales were close to about $10.2 billion in the first quarter of 2020. However, the operating income generated from AWS was over $3 billion, which represents a 33% in operating margin, compared to their product sales, which the operating income was just over $1.3 billion with a revenue of over $46 billion. So you can see the significant difference between the operating margins and how Amazon makes most of its income from the Amazon Web Services, even though the biggest revenue driver for the company is its product sales and Amazon as a retailer. Most of the margins are at AWS, with close to about 33% in operating margins. So that is going to be a really interesting thing to look at moving forward if Amazon is able to increase their sales when it comes down to AWS. That is going to continue to increase the profitability of the company, and is going to trickle down more and more towards the bottom line because of the higher margins. So now we're going to jump over to my TradingView platform to look at the stock price, look at the chart, look at the pattern, and where those next key support and resistance levels are going to be, so that we are better prepared for their earnings call next week. Alright guys, so here we are inside my TradingView platform. If this is the platform you'd like to use for yourself, all the links are going to be down in the description below. for you to get started with TradingView. So right now we're looking at Amazon, ticker symbol AMZN, and you can see that as of Friday's close, the stock closed at $3,008.91, and they were up close to 75 basis points. This right here is going to be their market cap, which sits at just over $1.5 trillion. The basic earnings per share, or the EPS, on a 12-month trailing basis is at $21.31. Their PE ratio is at a 142, and they are up on the week close to 1.5%, up on the month over 10%, up in the last 3 months close to 25%. The past 6 months they're up over 61%, and year to date they're up over 62%. So definitely a lot of significant returns for the company, and more specifically in the first 6 months of 2020. Going back as far as March of 2020, when the stock was essentially trading at around $1,600, and since then it has gone up over 100%, trading all the way as high as $3,400, which is going to be the all-time high for the company, or rather $3,344, which is the high for this candle right here. So right now we're looking at the weekly chart. If you were to kind of scroll back, you'll notice that this is nothing but an ascending pattern. The Amazon stock has been growing consistently. It's been increasing in value, making higher highs and higher lows, and it's consistently trading above its 200 moving average. So now if you jump over to the daily chart, you'll kind of understand that this right here is the earnings call that are coming up on July 30th. So the RSI right now is at 55, which is very neutral. So it's not too overbought, not too oversold. It's kind of consolidating sideways. And the MACD is also coming from an overbought position. So it peaked out around July 10th, and it's now starting to sell off a little bit. So now if we zoom in, you'll still see that it's trading above its 200-day moving average, which is going to be the blue line. And it just recently broke below the 9-day EMA, which is going to be the white line you guys see right here. So the resistance I'm going to mark is going to be around here, which is at 3250 to 3255 level, because that is essentially a double top for Amazon stock, and that's where the pattern has gone rejected, not once but now twice, going back as far as July 13th when we hit that level and pulled back, and then once again on July 21st when the pattern essentially touched the high 3240 and then sold off even further. So now we're going to go over to the 4-hour chart to understand where the support is going to be for Amazon stock. So the support that I'm going to mark for Amazon stock is going to be right here at 28.85, which was also the low for this candle, was at 28.88. And that, you can see, has previously acted as some type of area of consolidation and resistance before we finally gapped up and broke out of that level. And that, you can see, has more recently on July 16th acted as some type of support when we bounced off of 29.18, which was the low for this candle right here. So that's kind of like the range that I will personally be following for Amazon stock, between 32.58 to like 29.85, because it has been trading sideways and in between that range. And I wouldn't be surprised if the pattern pushes up prior to the earnings and retests the 32.55 level before getting rejected here once again. And depending on how well they do in earnings, then the stock can essentially either break out of this level or pull back down to the support at 28.85. Again, with these earnings, there's just so much uncertainty because the expectations are so sky high for these companies, and they're just expected to do incredibly well, that even if they report something that is not particularly interesting to the investors, they can see that as a negative catalyst, like we saw for Microsoft, right? They had picture perfect earnings, their revenue, their income, their EPS, everything was growing, they beat expectations, but the stock still tanked over 3%. For Microsoft, that's a pretty big hit, because again, they're a $1 trillion company, and 3% for a $1 trillion market cap still accumulates to a lot of money, right? That they lost in just one single day. So it's really uncertain to kind of predict where the stock price can potentially go, but what I will say is that's kind of like the range I will be following. 32.58 as a very clear level of resistance, 28.85 as a very clear level of support, and looking at the pattern right now, I do see it retesting 32.58 before pulling back and getting rejected once again. So prior to the earnings, I will be a little bit bullish on the stock, and after the earnings, you know, it really depends on how well they report. So now we're going to jump over to the second stock that we will be talking about, and that is going to be Facebook, ticker symbol FB. So now talking about Facebook, they report their earnings next Wednesday on July 29th, and they're one of the biggest online social media companies in the world. This right here is going to be their financial summary, and their sales are sitting at over $70 billion as of 2019, up from $55 billion in 2018 and $40.6 billion as of 2017. That number has been growing consistently at an average rate of over 37%, which again is really impressive provided how much the company is doing in revenue every year. Their gross profit margins sit at just over 84% while averaging at around 84.5%, and they're obviously more tech, similar to companies like Microsoft and Google, which is why their margins are incredibly higher compared to some other retail/tech companies like Apple and Amazon. That being said, the company remains super profitable with net income of over $18 billion in 2019, over $22 billion in 2018, and just over $15 billion and $10 billion in 2017 and 2016 respectively. The net income margin is at just over 26% as of 2019, which again is very good while averaging at around 35.48%, and the fact that Facebook is able to make close to 26 cents for every $1 in revenue represents a really good net income margin for the company. Looking at their EPS and revenue expectations going back 4 quarters, you'll notice how the company has consistently beaten both their EPS and revenue expectations until more recently for EPS, where they missed analyst estimates of $1.75 per share and reported $1.71 per share in EPS. Nonetheless, they still did better on the revenue. Now for the second quarter, which they report next Wednesday on July 29th, the EPS is expected to be somewhere around $1.44 per share, and the revenue expectations are close to $17.3 billion. Now looking at the balance sheet, this is probably the healthiest balance sheet I have ever looked at. The company has the strongest financials with cash sitting at just over $60 billion and a long-term debt well under control at $9.5 billion. That gives the company a solid cash to debt ratio of over 6, which is absolutely amazing, and it means for every $1 in long-term debt the company has, it has over $6 in cash to cover for it. Facebook's total assets also exceed its total liabilities by 4 times, which is always a great sign for investors, and their free cash flow to debt ratio is also over 2.4, and that means if they wanted to, they can completely pay off their entire long-term debt in well under a year, which again is great sign for the investors. Now we're going to jump over to their first fiscal quarter 2020 earnings call. We'll go over the presentation and kind of dissect their daily active users and look at some of their other segment breakdowns, their revenues, their net income, and their balance sheet before we jump over to my TradingView platform to do a technical analysis on the stock. Alright guys, so here we are inside Facebook's first quarter 2020 results, and the first slide you'll see is going to be the Facebook's daily active users, or DAUs. And this right here is a complete breakdown on how many people are actually going to Facebook and are actively using it on a day-to-day basis. Going back as far as the first quarter of 2018, that number was hovering around 1.4 to 1.47 billion people, to now sitting at well over 1.7 billion, and majority of the traffic coming in from Asia Pacific, which is what this represents right here, and it sits at around 678 million, which represents close to about 40% of the daily active traffic that's coming to Facebook. The US and Canada sits just under 200 million, which represents, I think, close to 11% of the total for the daily active users for Facebook. Now, if you were to kind of scroll down, this right here is going to be the Facebook's monthly active users, the MAUs, and the story is very similar. That number has consistently grown every quarter, and majority of the traffic coming again from Asia Pacific at over 1 billion people coming in from that region, while US, Canada, and some of the other continents like Europe are lagging behind at just under 400 to 253 million people for their monthly active users on Facebook. If you were to kind of scroll down, this right here is going to be the Facebook's average revenue per users, ARPUs, and one of the biggest ways that Facebook actually makes money is through advertising and allowing vendors and different companies to advertise their products, their services on Facebook. So this obviously takes into account the ad revenue divided by the number of users users that they have, and it gives them how much they're actually making on a per user basis. So you'll see how in rest of the world, worldwide, Asia Pacific, all of that combined, they're making close to about $6.95 as of the first quarter of 2020. In US, Canada, they're making the most in ARPUs at $34.18 as of the first quarter in 2020, with Europe at around $10.64 and rest of the world at just under $2. And Asia Pacific, even though majority of the traffic is coming from this region, they're making their average revenue per user is going to be the third highest at just over $3 per user. Another trend that I'm noticing here is that their first quarter is probably going to be the weakest among the entire fiscal year, because this right here goes back as far as Q1 of 2019, and you'll see for US and Canada that number was at $30.12. It picked up to $33.27, picked up to $34.55, and then the last quarter of 2019 that number was well over $40 per user. And the same thing happened for Europe as well. It was just under $10 in the first quarter 2019, picked up to over $10.70, picked up even further. Well, it was right around that level. It was hovering at $10.68, and then picked up even more during the fourth quarter of 2019. And it's the same story in the rest of the world and Asia Pacific, where it was just hovering under $2.78, and then it picked up towards the end at $3.57. So this number right here, we can see that number growing towards the end of the year. And that makes sense because last quarter of the year, September through December, is also kind of like the holiday season, where most of the companies and vendors want to promote and highlight and advertise their products and services during the holidays for Christmas, Thanksgiving, which is why they spend more money to get their products in front of their people, in front of their targeted audience and customers. So moving forward, this right here is going to be the family daily active people, or DAP, in billions. In the first quarter 2020, that number sits at 2.36 billion, up from the first quarter of 2019, which was at 2.1 billion. So there's definitely a lot of growth for Facebook on a quarter by quarter basis, and they have been consistently growing their user base. So now moving forward, we're going to quickly jump over to the revenue, which is going to be this right here. And like I mentioned earlier, majority of their revenue is coming from advertising, and the other source of the revenue is just simply other. But that being said, the first quarter in 2020, they were able to make close to $17.74 billion in advertising revenue. And like I said, the first quarter is probably the weakest of the four. You compare that to the first quarter of 2019, when they were just under $15 billion, and that number was essentially growing every single quarter to well over $20 billion in the fourth quarter of 2019. So that number we can expect to grow in the future, remainder of 2020, and it will be really interesting to see how the company did in the second quarter of 2020 when they report that revenue number next week on Wednesday. So now, last but not least, this right here is going to be the revenue by geography. I'm really interested to see how well the company is doing in these different regions and how much people are actually spending in terms of ad revenue. So interesting thing here, even though there's very little traffic coming in from US and Canada, that accounts for most of their ad revenue. So you can go back as far as the first quarter 2018, when $5.6 billion were coming in from US and Canada, and their total revenue for that quarter was just under $12 billion. So that represents almost 50% of the revenue coming in from the US and Canada, even though there's very little traffic coming in from that region. So that being said, rest of the world and Asia Pacific sit at 1.6 billion and 3.2 billion respectively. Europe sits at just over $4 billion, and US and Canada are just over $8.5 billion, with the total revenue coming at $17.737 billion in the first quarter of 2020. And we can expect that number to again increase over the quarters, because the last quarter of 2019 they did over $21 billion in revenue. So we can expect that number to eventually increase towards the end of the year. So now, quickly talking about the operating margin, I know that we went over their financial summary, but I just want to kind of address this one more time, that their operating margin has hovered well over 30% most of the times. But this right here, the first quarter 2019 and the second quarter 2019, is when their operating margin actually dipped below the 30% mark. And they have this note here, which includes a $3 billion and $2 billion in legal expenses accrued in the first and second quarter of 2019, respectively, related to the FTC settlement as discussed in our Q1 2019 and Q2 2019 press releases. So this was a lot of scrutiny for Mark Zuckerberg and for Facebook because of security issues, privacy issues, which is why they've had to present themselves multiple times in front of the Federal Trade Commission and also the Congress in order to answer some questions, which is what this fines represent. And the reason I bring this up is because this is something that we need to consider as Facebook investors, because if the company is always going to be under some type of scrutiny by the FTC and they're always going to be monitored, then it really becomes kind of like an ongoing challenge and an ongoing pressure for the company in order for them to continue to do business and continue to grow. So I hope that makes sense. And if the company was free and clear from all these obligations, then it goes without saying that it's growing significantly on a more consistent basis. But that's just something that we need to consider, that they're always going to have some type of pressure coming in from the FTC. So now moving on to the net income. Again, the net income has been consistently growing. It's been up there with over $4 to $5 billion every single quarter, when for the first time and the second time it dipped below the $3 billion mark in the Q1 2019 and Q2 2019. And again, the story is very similar. It includes a $3 billion legal expense accrued in the first quarter of 2019 related to the FTC matter discussed in our Q1 2019 press release. So last but not least, I wanted to go over their free cash flow reconciliation slide that essentially goes over how much the company has in free cash flows. And you guys can see, going back as far as the first quarter of 2018, the company has very solid free cash flows, and the cash flows are essentially calculated by taking cash from operating activities and subtracting capex, which is going to be capital expenditures related to property, equipment, plant, and so on and so forth. And doing that, you can see that the company is sitting at just over $7.3 billion in free cash flows right now in the first quarter of 2020. Alright guys, so this right here is going to be Facebook, ticker symbol FB, and they're listed on the NASDAQ exchange, and as of Friday's close, they closed at $230.71, and they were down close to about 81 basis points. To give you guys some very basic information on the company, the market cap sits at just over $657 billion with an EPS of $7.35. The PE ratio right now on a 12-month trailing basis sits at $31.87. Going back to the chart and going back to the pattern, right now we're looking at the weekly chart. So you can see that this is nothing but an ascending pattern. Again, similar to Amazon, it's been going up in value, increasing in price, and making higher highs and higher lows. And that's what this trend line or this trend channel represents, right? So it's been trading in between this trend channel. So now if you were to kind of zoom in, you'll notice that the stock price is essentially trading towards the upper half of the trend channel, and I wouldn't be surprised if we do see a pullback. But it's going to be a very significant pullback for the company, close to about 30% if it were to retrace back to this higher low, which I personally don't see happening anytime soon. That being said, the RSI is at 56 and it's coming from an overbought place to now kind of like a neutral range. So I wouldn't be surprised if we do see a minor pullback going forward. You can see the MACD is also kind of peaked out, and it's going to start its second half or like kind of pull back, signaling like a minor correction from both the MACD and the RSI perspective, and also the fact that it's already run up close to about 72% and it's trading right at its higher channel from within this trend channel that we have recognized. So now if you go over to the daily time frame, you'll see that there has been some very clear resistance for the stock price right around here at $246 to $250 level, which is where this trend line is also going to be. And if you were to kind of map out some horizontal resistance, it's going to be at $245 to $246 level. So this range right here has acted a very clear level of supply and resistance for Facebook stock. Now moving forward, I personally do see a strong support at around the $206 level, and the reason I mentioned that is that has previously acted as some really strong support going back as far as June 29th when we hit a low of $207 and we essentially bounced off of that level and Facebook pushed up close to 20%. If you were to kind of bring back the chart, you'll see that that has previously acted as some really strong resistance going back as far as July of 2019 when the pattern essentially pushed up all the way to 207 and then had a minor pullback down to 15% to its 200-day moving average. So I personally do see Facebook dropping down to $206 level, which is where the 200 moving average will also diverge moving forward. And this right here is going to be their earnings on July 29th. Again, this is not to say that it will pull back or it will have a minor correction. It can very well continue to trade higher and break above its all-time high and its resistance at $250 level. But just based on the fact that it is a little bit too overbought right now, in my opinion, and the fact that it is kind of signaling a minor downturn based on the 90 MA, which is also pointing down, and there is more downside to the stock from a support and resistance standpoint than there is upside. I wouldn't be surprised if the earnings come out and the investors and the people essentially find something as a negative catalyst and find something that they're not particularly interested in and can create a wave of irrational selling, as we saw for Netflix, as we saw for Microsoft, as we saw for Intel. All those companies essentially, even though they beat estimates, they beat expectations, they had a significant sell-off in the stock price. So that right there is going to be kind of like a quick breakdown on the Facebook stock. The resistance I'm going to be watching is at $245 to $250 level, and then there is a very strong support at $206 level, which has been validated multiple times. So I wouldn't be surprised if we do see a minor pullback down to this level. When the earnings come out, we do consolidate for a little bit and then push up higher and then eventually break out of our resistance at $245.91 or even all-time highs at over $250 level. So now the third stock I'm going to be talking about is going to be Google. We'll look into their financial summary, their earnings, and then jump over to my TradingView platform to look at their stock price.